Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Tuesday. Hopefully everybody's having a GGD, a great green day in the market. You know, I always wish the best for my viewers and subscribers. And speaking of subscribers, guys, if you haven't hit that subscribe button, go ahead and do that so you don't miss any of my uploads. So, jumping right into the portfolio today, we are down about $825 for the 1 week mark. We are up $97. The 1 month mark, we're down about $650. For the 3 month mark, we are down around $1,500. Year to date, we are down $600. We're down 1.2%. So not doing too bad. For the 1 year mark, we are down $114. And then all time, we are at $14,574.33, or up nearly 41% all time. So, short term, we've taken a little bit of a hit. Look at that 1 week mark. Jeez. Got all the way up to like 51K for this week, and then we're down almost down to 50,000. Short-term fluctuations, keep in mind, guys. Like Ben Graham said, in the short term, the market is a voting machine. In the long term, it is a weighing machine. So this is all opinion, right? And this is all fundamentals. And this is all fundamentals of the company. So just focus on the long term, guys. That's really where the money is made in stocks, is holding these companies long term and letting them compound. Right now, we're sitting pretty on 25.73 of buying power. That will just be added into my dividends coming for this next month. So, how are the individual stocks doing? Let's take a look. Looks like a lot of red, which is great for me. 6405 is Realty Income's price right now. 142 shares, $9,000 of market value. Average cost is $67, so we're down about $3 a share. 18% of the portfolio is in Realty Income. Today, we're down $35 in total. We're down $440, down almost 5% on Realty Income. But we do have a dividend coming in of $36.14. They pay 25 cents per share. So a nice cost down averaging opportunity there for Realty Income. Then we've got the golden stock, which I'm sipping one of these right now, is a Coca-Cola. We got 10 shares, $600 of market value. Average cost is right around $61 per share. 1.2% of the portfolio is in Coca-Cola. Today we're down $350. Total we're down $834, down 1.4%. A little bit of a cost down averaging opportunity there, but I'd rather buy it at like 59 something. But any opportunity is a good opportunity with Coca-Cola. This is one I plan on holding for my life, so I'm never selling out of it again. Then we got Altria, ticker symbol MO, sitting at 46.52. We have 315 shares, about $14,600 of market value. Average cost is $47.34. Right around 29% of the overall portfolio is in Altria, which means a third of my money is in this stock. Today we're down $211. Total we're down around $260, down almost 2% on the holding. But a nice cost down average opportunity. But guys, I'm more focused on Coca-Cola right now, and everybody who's watched for any significant amount of time knows my goal is to get to 100 shares of Coca-Cola. So even though there is a good deal on Altria right now, my capital is going to be more focused on Coca-Cola. Next, we've got Apple. Nice to see it down a little bit. I don't think it's down far enough, but let's take a look. Sitting at 151.64. Today it's down a little over $2. We only have 1 share of Apple, which that will be growing. This is one of my favorite companies on the entire stock market. Market value is 151.64. Average cost is 132.66. 0.3% of the portfolio is in Apple. So it's really just an eyedropper amount right now, but there's a reason for that. So today we're down $2.19. Total, we're up nearly $20. Have a 14% return on this 1 share. I want it to drop down to about 100. Well, I mean, obviously 132.66, but I want this to go down. The reason I added Apple is because AbbVie, the next stock, is up so much. So it's got 95 shares. Sorry, right now the stock price is around $153 a share. So we have 95 shares, $14,500 worth of market value. Average cost is around $95 a share. And around 30% of the portfolio is in AbbVie. So guys, 60% of my portfolio is made up of AbbVie and Altria. That will be going down as I add more to other positions. Today, We are down $223, or right around 1.5%. Total, we're up around $5,500, up over 60% on AbbVie. This is one of those, it's just like Coca-Cola for Warren Buffett. I bought it like 3-4 years ago, and I plan on holding it for the rest of my life unless the fundamentals change. The dividend growth has been spectacular, and I just want to keep on compounding. I just wish that it would drop a little bit so I could take advantage and put more money into this quality company. Buffett actually has owned AbbVie, but he sold out of it. I don't know why he sold out of it. I've done a lot of research on the company, and like I said, I liked the fundamentals prior to prior to me buying it. I did a lot of research on it before I put money into it, but then they had a acquisition. They bought another company, and I looked at the assets of the company, they were buying, kind of gave a rough estimate of around $150 to $160 is how much I thought the overall company would be worth once the acquisition went through, and once the pipelines got meshed together, and managements and employees and everything got settled and figured out. And right now it's sitting at 150, so right around the $150 mark. So I estimated right around a 50 to 60% upside. Funny that that's right where it's at. So this is a golden egg example of projecting a business into the future and being relatively close. Of course, anything could happen. I mean, it could have gone. It could be $100 stock. It could have been a $50 stock. It really, estimations are never 100%, right? But I saw the company at what I felt was a lower price. My intrinsic value for the company at that point, I felt was right around $90 to $100 a share, and I bought it at, I believe it was 85. So, I had like a $20 upside, but then I'm like, oh, with this company being, being added to the overall revenue streams and the pipelines and whatnot, the intellectual property of the company, I think it's 150, and here we are, 60% up, and I'm loving the compounding that's happening there. So, love AbbVie. It is by far my favorite stock investment. I just wish that it would go down in price a little bit so I could add more to the quality of what I already have. So, it is a third of the portfolio, and it's going to stay there because I'm not taking a dime out of AbbVie. And then we have Rowe Price sitting at $111.27. 100 shares. Market value is $11,127. Average cost is $121.70. 22% of the portfolio is in Rowe Price. Today we're down $333, down about 3%. Total we're down about $10,040, down 9% on Rowe Price. Great company. Pretty strong dividend growth. This last dividend increase was not anything to write home about. It was like 2.7% or something. Usually it's like 10 to 12% or double-digit dividend growth. So that was a little underwhelming. But I did own VFC, and they cut the dividend. And so after they cut it, I switched back to Rowe Price because I wanted to add it anyway. And so I want to have two quality stocks paying me every single month, plus Realty Income and Berkshire to finish out the portfolio. So I will be adding more Rowe Price once I have steady cash inflow. Keep in mind, though, guys, I am also trying to get to 100 shares of Coca-Cola, so I'm going to try to balance that out. At the rate I'm planning to go, which, of course, life happens, car issues, whatever, stuff gets in the way. I do want to hit 100 shares, but I also want to try to balance that out with buying more Rowe, because this third set of months is my lowest paying month, and I want to even out that cash flow. Because the whole point of this portfolio, guys, is to be able to one day live off dividends. And the issue with the portfolio right now, which it's totally fine, I knew it was going to happen. It just as long as you invest, things are going to change, dividends are going to go up, stocks are going to cut, whatnot. Prices are going to fluctuate, and some stocks are a better deal than others. So, like looking at it right now, AbbVie's not a good deal right now. I'm not putting not another dime into AbbVie. I'm not taking any money out of it, but I'm not adding. Rowe Price right now by far is the best value within my portfolio. So honestly, I should be pouring everything I have into Rowe Price, but since I want more exposure to Coca-Cola, it is my favorite stock on the entire market. I want to balance that out. So honestly, I believe when I did the math, I needed to buy about 8.3 shares a month of Coca-Cola to hit 100 by the end of the year. But I've been wanting to buy like 10 or 12 shares a month, which if you guys have been watching, you know that I lost my job recently. So I haven't been allocating any new funds into the portfolio as of right now because I'm living off of my savings. I do have a job interview, a few of them lined up this week and next week. So hopefully, I'll start getting back into the swing of things, getting paychecks and whatnot. So I'll be able to put more, allocate more capital towards the portfolio. I'm super excited about that. Like I said, bumps in the road happen. So if I don't hit 100 shares of Coca-Cola, it's not a huge deal, but that is the main goal for the portfolio this year. But I also do not want to neglect any of the deals that I see within the portfolio. And right now, T. Rowe Price is a killer deal. So if I had the capital, I would be pouring it into T. Rowe Price, and then I'd just make, I would kind of allocate extra capital if I could. I would kind of like take out extra, like let's say I don't go out to a movie or something like that. That movie money would go towards an extra share of Coca-Cola. So I'd balance it out. But then, guys, of course, I do want to make my income a little bit more even throughout the month. So Coca-Cola is going to help out Altria, and then Apple is going to help out AbbVie, and then Visa is actually going to help out T. Rowe Price. So jumping into the watch list, of course, I want to buy Visa. I use it every single day. I use it to pay my rent, pay my utility bills, pay my car insurance, everything. I use my card. So I swipe plastic everywhere. That's just my preferred method of payment. So every time I swipe my card, I pay myself. They take a small fee per transaction, and I technically, as an owner of this company, would get a portion of that profit in a dividend or slash stock buyback or earnings per share, technically. Excuse me. So I do want to buy Visa. They're down a bit today. Let's take a look. They're up, $14 in the past 3 months. For the year, they're up $23. And then for 5-year mark, of course, they're up like 102. So they are a huge compounder. So guys, if I had my choice, I would have bought it around this. I want to buy it at around $200. So anything at or below that, I'm taking. So, of course, October 10th, 2022, as we can see, it was down to 180. So I would have been loving to buy it there. The last time I would have bought it, I would probably say, even this past, couple weeks ago, it got down to 216. So December would have been the last time I would have comfortably bought Visa. So I'm going to be sitting and patiently waiting for a while, which is fine because as you guys saw earlier, T. Rowe Price is a good deal right now. So I'll be focused on T. Rowe Price until Visa hits, my safety spot, my margin of safety zone, and I'll buy more of that. I'll add that, I'll add Visa, and then I'll add to it as the price makes sense. And then, of course, we have Berkshire, the huge conglomerate run by Warren Buffett. Obviously, my favorite company that they own is See's Candy, but I also love Geico as well. So, and then they also own, I believe now it's 8% of Coca-Cola. I think it's 5% of Apple. They own just a massive amount of companies. So they own fully owned companies that take percentage back and put it into the business, and then the rest of the excess cash that they don't need it within that business, they just give to Berkshire at headquarters. So I love that aspect of the company, that they just have all these fully owned companies that they fully invest into the business to maintain it at least, or grow it, however much, the projections or whatever that they need. And then they take the excess cash flow and just pour it up to, take it back to Omaha, pour it into Buffett's account, and into Berkshire's account, and it just sits there. And then on top of that, plus the operating income and the float that they get from Geico, National Indemnity, and all the other insurance businesses that they have, that float rises, and then that adds to their cash pool, as well as they have their securities that they own, as like I said, Apple. They own like Kraft Heinz, Coca-Cola, Chevron. So they own a Bank of America. They own a lot, right? So those dividends also go into that same account. So where the fully owned businesses pour money in, and then the dividends pour money in, and then of course the float also is expendable, is put into that account as well. So they are sitting on billions of dollars, and I believe he said he needed 20 billion. I think it's 20 billion to keep the company of a 20. Yes, I think it's $20 billion dollars, and they have like 150. So they are well covered. And they are very good about allocating their capital. So I definitely want Buffett and his lieutenants working for me, and so I will be adding Berkshire. My goal is to have a share a year, essentially. So I'm technically behind. This is my 4th year of investing, and I don't have any shares of Berkshire. And I'm looking to change that once I get a job. So I will be adding that relatively soon as well. With that being said, guys, the price that I want to add Berkshire at is around $300 a share. So if I can get it below 300, I know, if we look at the 1-year chart, there's been ample opportunity here, 266, another one in 2022 of like 270. There's another opportunity right here at 267, 266. So there's opportunities. I just have to wait for them. Like even here to buy it. Sorry, stepdad's messaging me about stuff on Facebook. But even December of 2022, there was an option. So there's an opportunity to buy it at 300. So I just have to be patient, just like I said with Visa. So with that being said, guys, thank you so much for watching. Remember to hit the like button on this video because it really does help the channel, guys. Each individual video, the likes that they accumulate does help it get out to more people, spread the dividend investing, the goal, and it helps the channel. So it's awesome. The more people that know about dividend growth investing and the more people that I can inspire to start and, building their way towards financial freedom, that's what this is all about. So thank you guys so much for watching. Remember to subscribe to my channel, That Dividend Guy, and hit the bell notification so you don't miss any new updates, guys. I've been doing daily videos as much as I can. I still have COVID-19, so if you guys can tell, my throat's kind of sore and whatnot, but still trying to roll out the videos for you. So if you guys appreciate, the grind, make sure you hit the like button and subscribe. Thank you guys so much for watching, and I'll see you tomorrow with another Robinhood portfolio update. Take care, guys.